Okay, welcome everyone to the sandpit. Tonight we're going over descending triangles, descending, however you want to say it, whatever accent you want to say it in. A little bit behind descending triangles, it's used to track a downtrend. We use it to push through multiple support and resistance lines. It's because we're tracking a downtrend. It's used on top, not underneath. Just remember, if anyone has seen my other training, we track up trends from underneath the candles, down trends from on top of the candles as we push down. It's basically to catch a breakout. That's all it does. Where you put it makes a lot of sense. It can get difficult to track them. Any time frame works. We'll go through multiple time frames and explain the difference and why we use different time frames. That's about it I got for now. So I've got just some random charts we're going to go through and explain where we draw them, how we draw them. I'll come back to my original argument though. If you don't understand support and resistance, then this is going to be potentially tough for you. This is easy. Don't forget, I've currently got charts up where you can see where it's broken out. We've got, like you can see here, we've got an uptrend that's broken out. But when you don't have that, that's where it can be difficult. So I'm just going to throw a couple of lines on here because we can already see the chart. There's different ways to draw your line from different areas. It makes a huge difference. The more you chart, the more you figure out where to take these lines from. Again, random charts, I'm just going to say the tickets as I'm going through. We're going to chart OEG. We've got the daily up. We're going to throw some lines down. The easiest one would be just right here, right there. Again, you can see we've got support, common support here. You shouldn't draw an ascending triangle or descending triangle just with one touch. You need two, potentially more touches. So we have that touch there. This is very easy. This is where it gets tricky. Some people like to draw it from there. Some people like to draw it from here. You have to watch where it lines up from. What I find is normally the flagpole. So you can see the flagpole ends here. This is not part of the flagpole anymore because it hasn't pushed up far enough. So I would, if you use TradingView, you can press left control and it'll actually pick up every tip of every candle without actually just trying to get it right. So hit control, you've already got the top of the candle, and pull a line down. And that's a descending triangle. It's that easy. This is a very easy chart to do it on. But you need to be careful in the daily. So now that I have a rough line, it looks okay, but we're missing. Why isn't it touching here or why isn't it touching here? Should it run through the bottoms of these? This is the other thing that you need to work out. You'll find that some of these lines some of these will push out through the triangle and then come back into the triangle. And this is what you have to figure out. So what I like to do is work my way down the time frames so the wicks, so the candles get smaller, we get more of them. The more groups of wicks and candles you have, the easier it is to see where to put a line. So I'm not even going to worry about the 8 hour. We go straight for the 4. You can see now we've got a lot of candles. You can see it's missing a lot of them. It doesn't look too bad. It's not always going to be perfect, but all you do is just drag your line around and see if you can get some better lines. I'm looking at these two wicks here. Again, drawing trend lines like I've taught you guys, you don't use the wicks. Sometimes you can, it all depends on what you're doing. Using a single trend line sometimes calls for picking up wicks because it's just like support and resistance. It uses the trend line and wicks at the trend line. So you don't always have to, it's not always about finding the most touches all the time when you're running one line. Again, the more touches you can get, the more accurate your trend is going to be. I probably like that there. And again, it's looking for that taper. So you can see that angle. See how the candles actually finish on an angle? And when you put the line up to them, they all line up. That's what I like to see. It's kind of got the bottom of that candle there. We've got some good touches here. A little bit of a touch there. And you can see where it's broken out here. It's basically to catch a breakout. So what you would normally have here is you would have a hell of a lot more lines on here. You'd be looking at, you'd be looking at this there. You'd have lines there and lines there. So as you're tracking this down, don't forget you see all my drawings and they have a squeeze on them, right? So the squeeze indicates that there's a potential that the stock is going to work itself into this corner. It will only push out with volume. So you can see here, we got the volume. It just indicates a breakout straight away. You can see we've just got literally no volume for a breakout. So you can only assume that it's going to push through. And this is just how you track a downtrend. You just continue. You continue on each line. You can draw a squeeze if you want on each line. As you're coming down, and as it continues to push through, find your next level of support. I shouldn't say find your next level. Find your best major level of support and just draw yourself a squeeze in there. And we can see it's dropped through, dropped through, dropped through. Not a little bit of consolidation. See how here we've just got like one touch, a few touches, but we've got a lot of close touches here. So a little bit of consolidation. And then it's actually pushed up back into the support line, so into resistance, and broke through on that volume there. So don't forget, volume is an indicator for a push through. Safe bets. Excuse me. Excuse me. So safe bets for a entry. If we zoom in a little bit here, depending on how adventurous you're feeling, would be on the baseline. All right. So as the stock comes down, you're catching the bounce, or for a breakout. Normally where you see the squeeze, it's hard to determine, but to make sure that you get it right is you want to kind of catch it as it pushes out. Also be careful because they do push out and come back down and then they go. It's called a false breakout there. Again, if you don't have the volume, like generally you'd be looking for something like this one here. See how it's at least 2 times the volume you have here? That's kind of what you're looking for. This is freakish volume, which is great, but you can see the average volume we've got down here is very low, and anything like this is what you're looking for. Even a couple of bars there. You've got like 3 bars there that are definitely above average. That's the kind of stuff that you're looking for a breakout. If you're not seeing it, it's going to be a false breakout and just come back down. If you're good at scalping, you can catch it, but just be careful. I've seen a lot of them lately coming back down, and then they'll come back down, touch, and then they'll disappear. A lot of the times lately as well, they'll come into a squeeze. I've been seeing this the last couple of weeks. They'll come in, they'll look like they're going to squeeze, but, wrong one. They will do like a little fake out, and then they'll push through. So just be very wary of these. I would say be very wary of getting any entries on the baseline lately. They seem to drop right at the tip and then push through. I can't remember which one did it today. I might have it further down. That's a major downtrend. That's on the daily. All right, let's have a look at this flag real quick. Let's show you how to do a descending triangle. This is the type of flag that you would do a descending triangle. This is a proper flag. It's not a pennant. It's a proper flag, like you see on Mario Brothers. You know the flagpole, the triangle one. Let's have a look. So 15, I don't like 15 minute. I need more candles. I just need more wicks. 5. Yeah, 5, I could do the 5. Let's have a look at the 5. So now, sometimes you have to draw 2 lines. So what you would do is, the first line would have been, basically you would have drawn this flag out first. This could have been just a line. You got kind of a different kind of flag there. So the flag broke through. You can see we've got red volume. So just everyone wanted to sell after, looks like that was on open. No. Yep, 9:30 it just shot up and everyone just pretty much sold off, which is expected, but it's pushed through. So now we need to find the bottom. Where's the bottom? You've got more trend lines through here. We'll make them orange. So when you see my yellow trend lines, they're from the daily. They're the major ones. The orange ones are just from any other time frame, normally from the hour and below. And we've kind of got one in there. So where can we run a line from? We could run a line down here. So you can see it looked like it was nearly going to squeeze out of there. That might have got you a little bit excited there. Unfortunately, it didn't push through. And a good indication it didn't push through is before you enter a trade, make sure the bottom of the candle, or make sure the whole candle sticks through your resistance. So the candle should have actually been, wowzers. Well, that's a bit silly. No, it's not going to want me. No, forget it. Anyway, your whole candle needs to be over the line. Does everyone understand that? It's halfway through. We've got a green doji, but this is just a reversal candle, basically. All right. It's a very important tip that, yes, it looks great. Yes, it's going through resistance. No, it hasn't. It's just working its way through. Basic candle needs to be through it. And this is where you need to make sure you've got your lines in the best spot. All right, so I've currently wedged this line in here. You can see it's using support here and resistance over here. So it's wedged in there. Okay, now that line hasn't worked because now it's broken through it. You need to find another line. So right now, this hasn't broken out, but because it's on major support and it looks like we've got a red hammer occurring here, so we've got more bulls from the bottom pushing. You can see the long wick at the bottom of the candle. So now you run a second line, and normally from the second highest peak. See how that doesn't line up? So you'd run a line here, and then, like I said, line it up. You can see, don't worry if you go through candles here, that's fine, that's fine. What I've done is pulled it through some of these wicks and picked up the underneath here. And you'll find that it sometimes lines up with somewhere on the bull flag as well. If you go to a smaller time frame, where have we lined up? I picked up the bottom of that candle. I don't mind that, that's okay. It's probably cut a little bit too much through that, but that's all right. It's somewhere in the ballpark as well, so it doesn't always have to be exact. So now we're waiting for that to squeeze there. What we would do here is what I normally do is I would come here and say if this is going to come back up, just say it come back up, it's going to hit there. Let's just say it does that, right? Sometimes I don't always put them in the right spot, but I would say, I would get to this bounce here and I'd be like, right, I'm going to set my alert right there. And this will turn, oh, I've run out of alerts, but anyway. My alert would normally turn orange. Let's just say, let's draw an alert here. There. That's my alert line. So now you just leave it and walk away. When it hits, you come back to the chart and you just watch it. And if it pushes through, you can choose to wait until you get past a certain point, or you can enter it straight away. It's up to you. But just showing you scenarios how we work descending triangles. All right, I'll move on. We'll keep going. Back to the daily. We've got UPST here. I've just chose some random ones to track. We're going to track this one here. So again, you got to start with support and resistance lines. You can't do it without it. Okay. Let's just say that's there like that so you can't see it. You just get your trusty old trend line here and draw it through. That would normally be pulled down as far as you want. That's it. Now this is where it gets tricky here. So you can see all this volume here. It's a good indication that we've got a motion back into the stock, but followed by a red candle. We do have a hammer here though, so we would almost expect a continuation. Now, don't forget, this is where you got to look at your volume. So average volume is the black line, okay? Black line is the average, but look at the following days. You're twice the average, 2.5 times the average. That's what we're looking for. Seeing this one here is a good indication that we may see a continuation of a run, and then it continues the next day and the next day. So that's how you watch. It's hard to watch on the daily. It takes time. You have to wait for each candle to finish every day. It's a lot slower. But if you're unsure on getting into a trade, then use the daily and use the average. Draw a line there, use the average, show yourself what it looks like. And when it starts to get up like this, like you can even draw a trend line on it, and it actually has a slow uptrend as well, like that. So it's getting more, and you can see it just got more and more and more. And then a small sell-off. So now we've got another downhill here. Definitely can't track that. This is where you got to go definitely a smaller time frame. You can see here, I can see, I don't know if you can see it, but there's a double top here. So you could almost say this is a potential bull flag. You can draw your parallel lines up here like that, a bull flag. But a good indication that that's going to pop back up there. Not only seeing a bull flag is a double top here. Double tops don't always go to the same point. You can see here it looks exactly like a double top. So it might run sideways and then pop up again. So again, look for formations. You can see a double bottom in there, and then you've got the wick, and then it's pushed up. All these little things. It's just not a flag. A flag just doesn't go in and out, in and out. Look for other patterns within the flag that gives you an indication that you're going to get a return or a drop. All these little things we pick up. So now you can see that the candles are smaller. It looks a hell of a lot better. You can see all through the tips that we've gone through. You could even probably drop that even further. Drop it right down in there. No, I don't like that. Again, picking the right spot makes a big difference. And then we've got a good breakout. And you can see, again, the increase in volume on the 1 hour we've got here. All right. Hope that makes sense. We'll go to the next one. What have we got? Wint. Okay. went. I picked this one because the downtrend is so long. So when I start any chart, the first thing I do is I draw a big descending triangle. And the reason why I do this is to really make sure that where this has bottomed out, it's to track when I think this thing is going to be really positive. Look at this volume thing here. It's halfway up my chart. Look at it. Look at that volume there. If that's not a breakout, I don't know what is. So this thing, you could draw so many lines on this, but we won't. We'll just go down here. And you can even go to the weekly if you wanted to. Candles are too small. So this is probably going to be below the descending triangle. But we'll have a look here. We'll have a look. Let's just draw some lines in here. I'm going to draw our current base, which is there. I'm not going to draw any more right now. I'm just going to show you. Let's start from here. Let's see if I can get it to line up. If we don't, we'll move it. Yeah, remember when I spoke about using the tips? Well, this is a case where you would. You could use that if you wanted to, but this works well enough. It's given me some good touches here. And you can see we did poke through. It doesn't want to yet. So we've currently got this huge squeeze going on here. This is a huge squeeze for this stock. So we've got a big triangle. This shows us our major trend that we need to break. So once this breaks this, I would expect to see this move a lot quicker. It means it's broken the down trend and has then started an uptrend. So once we get through this, you would go very long on it. But we can continue to track the downtrend within a trend. So we go down on our time frames. And let's just put a couple more lines in here. And we can go like, I don't like that. Let's go back there. You can see you look for angles just look for angles like this. Now you can see it broke through. It's pushed through, which is good. You get excited, but just didn't like it. You can see we're still running just no volume down here. There's still no volume. Very, very low. I've had a little bit, but then you can see averages here, all right? Just trying to really point it out about the volume and breakouts. You can see average is black line. We had some good average here that pushed it up, but then it just dropped off and averaged out, so that's why it declined down here. And then we finally got a little bit more, and it just kind of went back down to average. So we draw another line. Once it pushes through a line, then you look for another line.
Hey, Sandy, excuse.
Yeah.
Do you think we have like 5 more minutes on this, or you'll be done before that?
I've probably got a bit longer, but it's going to be recorded. So.
Okay. No, it's all right. Okay, good. Thanks. Okay. I'll be right back.
Okay. We just continue drawing descending triangles. Don't forget you need to run it from a support line or resistance line. So let's just run it from there. And then we run another line, and then it breaks through and slowly picks up. And then that's when you would draw a line underneath and just touching on ascending triangles. That's now the opposite. So you're trying to track the breakouts with descending triangles and ascending triangles. Both work the same. On volume, they'll push out. When they don't have volume, they'll push back down through that support line. And then you've got a flag here. We can track the flag. So this flag, right now it's probably close to a breakout. So let's just throw a couple of lines on here. That's probably a good line to start with, and let's just run a line on here, just down here, like so. You can see I've got a wick in there. I've got a top of the candle there, and I've got some wicks here. Okay, nice touch there. Nice consolidation touches. That's really good touches there. It gives me a good indication that I've got this set up. And now here's where it's tricky. So you could have entered here and now just wait. We need some volume though. So this is part of our watch list currently. These are. It did break out, but what's it going to do? That's the question. Again, we don't really have a whole lot of volume, so probably not going to go far tomorrow unless we get interest. All right, next, LODE. We're going to track this flag here. Let's see what kind of line we can get here. That one will do. You could add one here. Alright. I don't think I'm going to use that, but I'm going to start from here. I might have to go smaller. There's actually two in here. So that would have been a decent entry for a scalp. You know, $4 up through $6. It's a good $2 scalp. Hit major resistance. So as soon as it starts falling from major resistance, you should sell. Definitely sell. It's not going back. If it's not going through, it's not going through. You can see no candles decided to go through, just wicks. Basically, this line goes through there like that. I'd have to go into a smaller time frame, but it looks like there's a little bit of volume down there. And that's broken out, and then all we do is track it. Track it going up then. Just like that. Normally you try and go from a point down here, but then you track that uptrend. Once it breaks down through the downtrend, that's when you'd sell. And then you would have, you know, you've got descending triangles on all of these. These lines are used everywhere. We're always looking for that edge. We're traders. We trade long. We're always looking for that breakout. This is why we use them. If you've got no questions, we'll move on. Hope I'm not going too fast. I hope I'm explaining it well enough you can understand. Please reach out if you've got questions. Okay, what have I done here? Don't like that one. Alright, this is a nice easy one. Big trend again. We'll start with a line or two. And we just find a candle. I normally like to, like I said, normally like to grab the flagpole first and pull down. Sometimes I like to use two lines. Just in case this wanted to push out again, it gives me a reference to double check in case I get another breakout. If it pushes through that line, there's a potential it'll break out, but otherwise it's just another trading channel in here. Don't forget, you know, real trading channels for downtrends. That would be probably there. That would be the real trading channel for tracking that downtrend. So we're using this line. So we're gonna have to put a support line here. So don't forget, as this would be coming down, we would be adding our lines in on the way down. Okay. So we can see volume. We've got a breakout, and then volume's back to average. So it dropped down. Again, you'd have to use a smaller time frame to really pick that up. And you could track that there like that. And then we've had another breakout, and then that hasn't worked. So then we track another one. This one's very hard to track because it's fallen off. But now we might have to go down the flagpole and find that one there. That's where it sits. Probably drag this up a little bit, up into there. That's a breakout. It looks easy. I think it's easy. We've got a little bit more than average volume here, a little bit more. I think average would be about somewhere down there. Oh, where's my line there? So you can see that the black line's average. We've got more than average. So more than average is good. Again, you've got all the other indicators to look at. MACD, stochastic, RSI, everything else is an indicator, but you know, if you didn't have those and you just wanted to test your skills with volume, this is how you would track breakouts or whether the stock goes up or down. It's all to do with average volume. I think we've got time. What do we got time for? We've got time for a couple more. RMED. This one's just a nice long one. Again, you need to have your support line on there. Doesn't work without a support line. So you could run a couple here, but because, let's just say I only had that much information, I didn't have that breakout now, I don't know if I would run it, I don't know if I would do this. I wouldn't go and track all of these. You could if you wanted to learn, but just use the one big one. That's what you got there. You've got your dip and you've got your touch here. You can see where it lines up perfect. Now you can see where this one's come down, and this trend line has now not only been in resistance, but it's also acting as support now. And whether that lines up on a smaller time frame, pretty much does. You can see now that flag, that's our support line. And all I would do here is you can run a line through there. Sometimes I like to use the trend lines as support. And it looks like I'm going to use that one there. You could run a line here, there, but it might be just a little bit too steep. It comes down to practice. You'll find that might be too steep, this one. So I look for just the little candles. Sometimes use the big ones. It really depends what it looks like. And then you got to try and track the up ramp. You can see the up ramp lines up, so that could potentially be a squeeze there, ready to go. So I would definitely be watching this area for a squeeze. See if we get some volume. And then putting a crisscross like this, I'm just going to steer away from descending triangles here and just quickly talk about trading areas or trading zones within. When you've got a crossway like this, you've got 4 trading zones. You've got one in here, you've got one in here, one there and one there. Now the way that the stock works is whichever of these it jumps in, it will follow it. So if the stock was to jump out into here, then theoretically it normally would use that and go from there. If it pushed down into here, it normally wouldn't go past that, and it would push down into here. And if the stock would push into here, then these 2 trend lines will act as support and resistance. You will find that the stock will then open itself up and get bigger like that. All right, Just little tech tip there. When you see that I've noted different zones, then that's why. And believe me, they work. When you draw these lines, they stick to in between these lines. It'll follow it, like I said. These zones you'll see, they just open themselves up bigger and bigger. All right, next. All right, chart this flag real quick. Again, we're just trying to get the edge and find the breakout before anyone else does. So we got our line. Now, I don't have enough candles or wicks to really look at it, so we'll go down into the 15. Let's have a look. No. 5. Let's try the 3. All right, now we're talking. So, a failed flag to start with. We could say, I'm going to go with a flat top on this one. You can see the volume down here taper off big time. Can you see that? Just a good average there. It's actually tapered down. That's why it's fallen through. And then I like to pull my lines through. Don't just leave it there. Pull it through and see where it touches. You can see the angle continues all the way up here. So that's where I like it. And that's where our breakout is. They're always down in this squeeze area, majority of the time. 95% of the time, they're always right down the bottom. Somewhere close. I haven't worked out whether it's a square. You can see the squares in the background or two, but it's just a range. Again, it all comes down to volume. Now, there's not a lot of volume that has spiked it, but it must just have enough to just create a slight uptrend here. There's always the potential that it could come up, and it looks like you've got resistance probably about there. You can see we've got a reversal candle here. Got a lot of selling there. So again, look, right on resistance, we've got selling. I'd have to go look at other indicators to see what it's going to do. But potentially that could have been a scalp. You could sell it there, wait to see what it does, and then once it pushes through, that's another buy-in area to buy in and take your next line up. Okay. All right. I think we'll end the night with Wish. So you can see a huge flag. So Wish started off in 16th of December 20. Now, when you get ones like this that don't have a lot of data, you just use a smaller time frame. Let's start here. I'm just pedantic about my colors. No, don't mind me. Sometimes if you turn extended hours on, it gets a bit messy. So just turn it off. There's no need for it to be on. Okay, I like the 4 hour. Now let's have a look. So this here. Just remember, the more you do it, the more you see. I can see it lining up from this one here. Pretty close. Where are we going here? Somewhere in there. And you can see it's picked up the downtrend on the flag here. I'd say that's pretty good. I had some more support in here. There. Okay, that's our downtrend. High volume. There she goes. You can draw your fancy little symbol here. That's a squeeze. Easy peasy. Let's go check out the flag further in. I think we need the 5 or lower. Ooh, I like the 15. That looks very nice. So we just track this. You can start in the middle if you want. Sometimes you can start and just track it like that, just to get your angles right, and then pull it through, and then you can adjust it accordingly. just like that. It looks like it's squeezed through, and you can see the volume here. It looks like the latest amount of average volume is down here. We'll draw that black. All right, so average over the last 2 weeks has been down here, and we've got a little bit of we've got double the average volume here over the last 2 weeks here, I would say. So that's why it's kicked up. If you pull this down into a smaller time frame, that's our little kick. You can see the volume curve. So its volume's coming down, 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 and then it's ticked up again. And that's pushed us out. I could draw more lines in here, but I would almost expect that to go straight up to there and stop. Again, you might get a little bit of a dip and then again push through. Major support and resistance normally stop it. Dip a little, then go back through it. Only on really high volume like this, it'll just be like, no, I'm going straight through. Sorry. Do not go to jail. Do not pass go. Go straight to jail, kind of thing. Just no remorse, straight through. It all comes down to how much volume is pushing it. Okay, that's it. That's Wish. Question time. The floor is open. Does that make sense to everyone? Anyone got any questions? No? Quiet is good. Okay. Well, if you're shy and you don't want to ask a question here, you can certainly PM me later. Get a hold of me somehow and I can go over it again. Again, I can do one-on-one things live and show you briefly if you're having trouble. Please let me know. I'm here to help. That's what I'm here for. So if no one's got any questions, I'm going to end it there. I appreciate everyone stopping by. Give this video a like, hit subscribe if you want to see more of my content, and I will see you next time. And most importantly, don't panic, chart it. Good night, everyone. Thank you.